I was sitting behind my desk when Jane and Walter walked in with desperate looks on their faces. I didn't know it at the time, but that day would change my life. Jane shared information about themselves. You can probably relate to a lot of it, but hopefully you can avoid their ending. She explained that they both went to college. They both got good jobs and have always done pretty well for themselves. They were responsible with their money. They followed conventional wisdom and they invested in their 401k, invested some more outside of their 401k, and they had some savings in case of emergency. Essentially, they were both 64 years old and had made smart decisions over the past 40 years. Most of their funds were in Walter's old 401k, which he had rolled into an account like a Fidelity account. That is also where they had their extra investing. They had some money in his current plan with the company he had recently announced his retirement from. Thanks to the bull market of the prior few years, the investments passed $1 million just a couple years ago. But that's where the good news ends. According to Charles Schwab on their website, a correction of 20% or more occurs almost every 2 years. But this was worse. When the dot-com bubble burst, the NASDAQ dropped 70% from the spring of 2000 to the spring of 2001. This conversation was taking place during the summer of 2001. Jane explained, "We worked hard, saved, and invested for over 40 years. Our prior advisor had our funds split between several indexes, so we were diversified. Even with that diversification, over the last 12 months, it wiped out more than $500,000 of our $1.1 million investment and retirement fund. We plan on retiring 6 months from now. So unless there's an option we don't know about, we're going to be forced to either work another 5 to 7 years, or we retire now on half the budget that we had planned. We could put the money in a CD at 4% and live off the interest, but that would only be $20,000 a year in interest. We would be living in poverty. How did we go from millionaire to living in poverty in 1 year? And what can you do to help?" That's what she asked me. None of the advanced courses I took on financial planning prepared me for that question. So that day changed my life. I had been a financial advisor for almost 10 years. I'd heard similar stories that year, but that was the last one. They spent their entire careers thinking they had done everything right, but that didn't matter. I knew they were not properly diversified, but I could not help them because it was too late. Also, financial advisors are only allowed to discuss licensed financial products. I could not share the benefits of real estate or gold or many other valuable investments. I could not help them diversify properly because I was a financial advisor. Even if I could have recommended other investments, it was too late for them. And that is why that moment persuaded me to stop recommending the stock market as the only solution to investing. I wanted to get better results for my clients and could not help them properly diversify if I was restricted to just the stock market. So I gave up my securities licenses and have started showing people how to invest in real estate. Since then, I've added several other markets, but real estate was my focus for the next 15 years. So back to Jane and Walter. So what happened to them? Honestly, I do not know. They were good people, and I'm sure they found a way. Last I heard, they were leaning towards moving in with their adult children and their grandchildren by reducing their household expenses and by reducing their travel budget they had planned for retirement. They were hoping they would not have to go back to work. If you want to avoid their fate, you make sure you understand true diversification. We recommend at least 6 non-correlated investment markets so you have protection. Non-correlated is just a fancy investing term that means not related. In other words, if one market, such as the stock market, goes down, this has no impact on the other 5 markets. They're not related or non-correlated. The stock market could certainly be one of those markets you invest in, but make sure you find others. If you want to know about some of the markets we utilize, join Unbroken Investing Community using the link in the description below. The bottom line, don't rely on conventional wisdom and diversify a lot. Let us know how we can help and live richly.